The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome, everyone, to another edition of Zacks Rank Buy. I am Brian Boland, and I am the aggressive growth stock strategist here at Zacks, and I'm here with two more aggressive growth stocks for your growth radar screen. And as you can see, the very first one is Harmonic, and that's HLIT for the ticker. It's a Zacks rank number one, and that makes it a strong buy. Normally, I like to see an A, but a B for the value for the growth style score here is pretty acceptable for this video. And it has a D, so I like to see that divergence where the value score is lower than the growth score. That tells me right away I'm on the right path. You could see yesterday there was a gigantic move in this stock. It was up 24%. And right down here, let's take a look, just a quick look at that chart right there. We can see that, that was a big skyrocket of a move higher. So what went on? So what happens is one of their customers is Comcast, and they said that they will be adopting their software technology for their cable OS system, and that they're going to be spending a good amount of money in this calendar year, as well as commitment over the next 4, as well as buying stock. So a lot's going on here. If we think about this company here, we've seen good beats here, 300, 120%, a 16% beat. And estimates, well, in the last 60 days, this is holding still, but obviously a beatable number here. This one's moving higher. This one's moving higher over the last 60 days, and this one's moving higher. So that's why we've got a good Zacks rank on the name. So now if we take a look at the valuation, we do see some sky-high numbers here. There's 372 times earnings. That's a little stiff, but only 3 times book. So that's a good thing, and a small price to sales right there. But the idea really isn't so much that what has happened. It's what's about to happen. Obviously, if Comcast is a big buyer in this stock and now owns a significant amount of shares, or at least the right to own another 7 million shares, you can see now it becomes really a potential takeout target. We see a few years ago this stock was testing the $8 range right up there. I wouldn't be a bit surprised if this thing runs over $10 in the near term, and is definitely something that in the next year or two could easily be bought out for a hefty premium by Comcast. So look for that. All right, let's put the next stock up here for what we're looking at here, and this is a little bit more traditional of what we expect. Enphase Energy, that's ENPH is your ticker. It's a Zacks rank number one strong buy. It has an A for growth and a D for value, and I just want to jump right into this one by highlighting this chart. I know this is kind of a small one, but boy, right now with the market being the way that it is, you love to see a stock that has this sort of movement to it. May was not a good month for stocks. A lot of them went down in May. This stock went up, and it continued in June, as a lot of other stocks did, and looks to be continue that in July as well. Boy, all that is good to see. And now this is a chip stock that is focused in the solar space. If we look at the earnings history, it's okay. There's a big beat here. There's a meet here. There's a miss there. So we don't like to see that. But a big beat here. And the idea is that earnings estimates, are moving up in general. So we see that this quarter, this is actually a decrease of a penny. That's not so good. This is staying still over the last 60 days. So is this. But this is where you got your little bit of movement higher. And the Zacks rank puts a little bit more weight on stocks that have an annual increase in numbers. If we take a look at the valuation, you are paying up for this one, 38 times forward earnings, but 43% top line growth. That's what we like to see in aggressive growth stock. Your price to book is pretty obscene here at 155 times. But there's solid price to sales number. And here's the problem with a name like this. You're going to have margins. They're not where we like to see them right now, but they're moving in the right direction from -3 to +1%. Let's go ahead and take a quick look at the chart here, and we can see, boy, oh boy, solar names are moving up. this one. What a move here over the last year and a half. Obviously, solar stocks are really catching fire here. We had Goldman Sachs basically upgrade the entire sector a couple weeks ago. Strength continuing in these names looks to continue going forward as uh, alternative energy plays are getting more and more play for the market. That's it for this week. Be sure to join us next time when we take a look at two more aggressive growth stocks for your aggressive growth radar screen.